roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today. I'm Cesar Delgado. I am your host of today's program. I am joining with Mike Miner from Professional Agri Marketing. Mike is in Minnesota. We were going to ask him about the wheat yield in Minnesota and fundamentals on the grains markets for right now. Well, this growing season is doing well, otherwise we got a shower or two, but it's doing well and good. Otherwise, this been back roads of Illinois. We were talking with Mike Miner from Professional Agri. The following with the commodities markets is lower than previous years. The corn acreage is lower than previously estimated on the planting intention report on March 31st from the Department of Agriculture. We will be talking about it with Mike Miner from Professional Agri Marketing. Mike, how are you?
I am doing just fine today. We had a lot of market trade this week, so it'll be an exciting show today.
Mike, let's discuss about the WASDE for today. We are going to be diving into this report. Go ahead, you can explain it to our audience. What is your thoughts on it?
Yeah, so the WASD report came out today. The market reacted negatively or bearish on both corn and soybeans to the report. We were able to really see a growing trend in the soybean balance sheet. Let's start there. So a lot of the columns had been adjusted in each row. They changed ever so slightly, but nothing outside of what the market wasn't really expecting. It came in slightly bearish, but we did see a growing trend now starting to build where they increased the crush number and then they decreased the export number. And I think you'll see that going forward in the soybean market as we move away from an export soybean market more towards a domestic use food versus fuel debate here in the United States. And as we see that continue to adjust, we will over time see soybeans be more appreciative of what current fundamentals look like when it comes to price. So that was one thing I've noticed. Ending stocks came in at 310 million bushels on soybeans, and the corn came in slightly lower than last month's report at 1.66 billion bushels there. One of the things that we had seen was they finally increased old crop exports. I think that was worth mentioning. Fundamentals look good, but that was slightly offset by a lower feed number, which was pretty much expected. So, globally, one of the only major changes there was that the U.S. corn ending stocks and Chinese ending stocks on corn both dropped a little bit more than expected for the global numbers on the balance sheets. So those were the main items in today's WASD report. We were pretty much down a couple cents on corn after the report, about a nickel on soybeans through most of the day. And not a bullish report by any means, but not a really bearish one either. Now we go back to trading other things again and kind of wait until we develop the crop more and trade pollination here coming.
How was the corn numbers on the report, Mike?
I mean, the corn numbers were pretty decent. I would argue that on the corn side, no major adjustment in supply side. They just made the change from the acreage report. Left yield the same, which I was a little concerned they might change yield. They haven't raised it since 2003 in the July report. That was significant that they left that the same, so that was good. And then the demand side, I think they finally just continued to make more adjustments for the export export category, mainly on old crop. And when it comes to the balance sheet, the old crop numbers fundamentally are way too tight versus where prices are. It's just that new crop, big number on production, holding back old crop prices as well. But I would argue at this point, we're trading a much bigger yield than the 181 they have on there. We're likely trading something closer to a 185 yield, in my opinion, there.
How is your crop tour in Minnesota? Because the corn yield is average. Could
The
you tell
crop,
our audience what's that mean about the corn yield?
yeah, if I look at the corn conditions globally for the United States, we're above 70% good to excellent conditions on corn right now. And in July, when you've got above 70%, almost every year that equates to an above trendline yield. And I think the market is trading that. Around our area, it sure seems like a lot of producers are saying, the corn looks very good and the soybeans look like crap, is kind of where we're sitting. And that's not abnormal, anyways. And at this point, I think we have huge potential for corn yield locally in this tri-state area here. If you go to Illinois, maybe over there by you guys, maybe it's more, an average, little above average. But are we going to blow the doors off this crop? Maybe not. So to get anything above a 185 national yield, I think you really have to plug in a lot of record yields for states, and that starts to get really tough. Sure, we can post 184. I think that's doable, but to get much more above that, it's going to take some giant numbers.
How about the beans yields with the weather in southern Minnesota?
Soybeans, I would argue we are sitting early. I mean, August is more important, probably. The soybeans don't look the best at the moment. We'll see if we continue to get maybe too much rain in eastern Minnesota specifically. Soybeans don't like wet feet, and they've had a lot of wet feet over there, some giant rainfall in that part of the world. If you go north of where I'm at, like Millbank and through that area, that would probably be, there's some pretty wet spots through there, had some tornadoes, hailstorms, things like that. But locally, I think we're sitting A-OK going through corn pollination, and then soybeans, we'll just see what August comes out like. But up until this point, the flowers look fantastic.
Sure. Do you have any final thoughts on the fundamentals on the grains and livestock as well?
Any other fundamentals? I would say that we're at a breaking point on the December corn, for example. From here on out, last year, you had a similar fundamental position with funds. You had a similar trend in price. We went lower into the end of August and made a low. And we're following the similar trend. I'm just curious if we're going to do that again this year. I'm worried. We're going to need something to try to break us away from that. Otherwise, it's going to be a difficult way to rally this market. We need a supply problem to have a significant rally in the corn market and soybean market. At this point, some good news outside of that seems like it's only going to amount to a few days of positive data, a few days of positive trade reaction. So, on that news, I would just say if you have outside of supply rallies, that would be a selling opportunity. Otherwise, if we start to develop a supply rally, that's where I think you could see the fireworks. And I think we're probably trading like a 185 corn yield at this point. We'll probably try to make that smaller at some point. But fundamentally, weather looks great going through pollination here over the next couple weeks. And the corn market's trading at a very low level versus where fundamentals are because demand's been very good. And I wouldn't let that 185 yield scare you. On the balance sheets, 185, it doesn't look as bad as maybe some people are worried that it looks. You don't have to get much below $4 with a 185 or above. And that I think we're trading today. So that's kind of what I got on the deal. Soybeans, I think you continue to make this transition from pulling away from exports, pushing more towards the crush expansion in that industry. And we'll just have to take some time to figure out how that situation is going to look the next couple of years down the road.
How about a technical buying in the grains markets, Mike?
Yeah, technical analysis here. I would argue that we're at a pretty strong support point on December corn around this 410 area. When I look at the options volume and trades and the worth of options around this level, the market's not really anticipating we're going to go much lower or much higher than where we're already at today. We have very cheap options, not very far away from the money in this corn market right now. So, from a technical perspective, it really doesn't want to move much from where we're at right now. If we start to see a rally, they're going to try to fill those gaps higher up. So on the corn and soybeans, those are some of the technical observations I'm looking for. You get back to like 430 on December corn, for example. That's where that gap is that we left on Monday. So that's kind of what I'm looking at the moment.
Thanks, Mike.
Thank you so much.
This is Mike Miner from Professional Agri Marketing on Back Roads of Illinois.